Hello everyone, welcome to this week's edition of the Fibonacci Review. Today I'm looking at a typical stock called Lithium. Now everybody thinks that rare minerals and battery minerals are going to be the next big thing, but as we can see on this chart, the price of the market is showing you that everybody who's involved in this stock is quite clearly getting out. Now the price of this market, as you can see, November 2022 was $1.80. That was the high price. You can see recently it's traded below 20 cents. Now what we need to do as traders is to figure out, why does the market do this? What are the signals? What is it that we can find on the chart that's going to give us a warning that this is likely to be a substantial high? Now of course the market can do anything once it creates a turning point, but there are some fabulous Gann tools that got us to this particular peak and warned us that it was likely to have a significant decline, and then you can manage your position or your holdings based on your knowledge and your experience with these fabulous Gann tools. Now, one of the things that Gann was most known for was his work with time. He was the first to say that time in a market is more important than price in a market. And at one point in his trading, he said that the number 144 was his greatest discovery in trading. He went on to discover and implement many other fabulous tools after that, but I still think the number 144 is extremely significant in any market, whether that is a stock, an index, a foreign exchange. I'm going to show you why it's so significant. And in Optima, there's several ways of keeping track of time counts. For clarity on today's report, I'm going to use the time price measure tool. Now you can see down through here, before the important all-time high came in, there was a double bottom low. Now, double bottoms are extremely important because it's confirmation by traders that this is where they see value in the stock, and then the market continues to run very strongly from this point where all the stock that's offered for sale is being acquired. So it creates a nice strong run, and a very significant point later on in the history of the market. Gann created time counts from these lows. He created angles from these lows. He took a record of the time, the price, the pattern, and he looked to see what happened later on. If we use our time factor from this first significant low and check the all-time high, you will see that it is 144 calendar days from low to high. Now that, of course, is Gann's favorite number. He saw this, and I have seen this in the last 30 years, thousands and thousands of times, that markets create significant reversals at 144 calendar days, 144 trading days, 144 weeks, 144 months. I'm always on the lookout for that number in trading. And that, of course, was a false break above the tops, exactly 144 days from the major start of the run. This market capitulated, and as you can see, it's been in a downtrend ever since. These Gann tools are fabulous if you take the time to learn and understand them, but here is a classic example of Gann and timing at work in a typical stock. I hope that makes sense for you, and of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci and Gann technique in trading. Bye for now.